Anyway, I'm going to take a pause there before we come back to the group panel at the end and ask Mr. Abhishant Pant, who's our last speaker, to share his thoughts and insights with us from the snowy peaks of Himachal Pradesh, I think.
Yeah, thanks, Adrian, and good to hear Osborne and Anil before. Yes, I'm in a remote place in Himachal, which is I think from the nearby airport it is around 10 hours. So it's a remote place and interesting place to be. Possibly one of the most beautiful, and at this point of time I'm surrounded by people from startup community. Some are working there, some are working, so that's the beauty, that you can work from mountains and don't bother for whether you will be digitally connected or not. So this is far cry from the world that we used to see earlier. So, and also happy for the fact that some of these startups which I saw initially are at a stage. So possibly I heard the first pitch of Jackasan way back in 2018 June, and that was possibly for the first time Adrian, the other Adrian, which is the founder of Jackasan, came into a room. Yeah, came into the room and talked about what Jackasan is doing, and that was possibly his first or second pitch. Osborne talked about Discovery and Yap. Discovery and Yap are both our seed investments. We seed invested into that infrastructure to essentially possibly become the largest provider of APIs from the point of view retail banking, payments, and insurance. Let me come to how I have seen things evolve and how I believe that things have changed over the period of time. So I think I'll divide it into three phases. First phase was somewhere in 1999 to 2005-6 type of a phase. That was the phase when dot-com companies started in India. They were not at that point of time fintech companies. One of the first, if not the first, was a company called apnaloan.com. Apnaloan.com was essentially the digital version of that time's biggest DSA called Andromeda. Andromeda in India at that point of time was city's largest DSA. They used to churn credit card mortgages like anything. And then in the height of the dot-com boom during the Y2K bug period, they thought that why not let us essentially create a digital avatar of ours. And that's when a physical down the road DSA decided to become a digital version of themselves. Of course, it's not so easy to go from a physical to digital over the period of time. It failed. It didn't essentially survive. But then over the period of next few years, further attempts were made. Another attempt was made in 2006 when Citibank, Airtel, and a few early entrepreneurs created a mobile banking value chain. It was launched with much fanfare in 2006. There was a full page and ad in Times of India, which talked about how Airtel, Citibank, Visa have come together to create a mobile interface from a payments point of view. That is pre-UPI, pre-IMPS era from a payments point of view. Then 2007-8 was an interesting time again when the first prepaid programs came into existence, and this was pre the regulatory landscape even came into picture. So the prepaid guidelines from a regulatory landscape point of view came in 2010, while the first set of prepaid startups came earlier. So Naveen Surya, who was the founder of an entity called IdsCash, became one of the first providers of prepaid value chains, which essentially meant that, and I remember the advertisements on those days on streets, that you don't need to bother for your railway ticket bookings. You now have a prepaid card and you can book those railway tickets using that. So if you see what we saw initially in late 90s was a digital avatar of a DSA. Then what we saw is a first real attempt of digitization from a payments point of view in mid 2000s. And then we saw somebody in the late 2000s trying to essentially provide a separate instrument from a payments lens point of view. And that's how essentially things kept on evolving. I think between 2008 and 2010, some of the big things happened from a global landscape point of view, and they essentially started impacting India at the same point of time. This is how I see that, and I don't have a presentation or deck to talk about that, but these are four things which I believe happened globally and also happened to an Indian consumer at that point of time. Obviously, all of us know 2008, Lehman crisis and everything else around that. But then what actually was the impact of Lehman crisis to the banks, apart from the balance sheet being screwed up and everything else, was the fact that the tech infrastructure of banks. Banks stopped investing in tech infrastructure between 2008 and to 2010-11. During the same period, while banks stopped essentially any form of large expenses and all of that, in India there was a huge hue and cry about every single penny that you spend. At the same point of time, I as a consumer was moving from Orkut to Facebook. I as a consumer was moving from Yahoo search Ask Jeeves to Google search. I as a consumer was moving from a single person economy to a shared economy. I as a consumer was moving and graduating from a dumb phone, a Nokia egg-shaped phone which used to come. I'm not recollecting the exact name of that. So from that phone, I was moving to 2008 when the App Store got launched and my smartphone actually became smart. So these were four things which happened during 2008-9, which is I as a consumer, if I had a question, I had an answer, which means that I was no longer dependent on anyone else. So what I needed was a question, and if I have a broadband connectivity, I have the answer. So that means that all intellectual delight anywhere else in the world that is beatable if I have the right question. So if I have a right question and a broadband internet, I'm better than anyone else in terms of identifying and providing an answer with. So that was the first thing, which meant that intellectually the possibility of intellectual capital expansion became high. Second thing which happened during that period was the fact that if I had the question and I had the answer, and if I wanted to share that answer with people, then I had Facebook or social media, which allowed me to do and share. So that's the principle of us humans. We want to share what we know. And that's essentially started happening as the second thing, which is I had a question, I had an answer, and I had ability to share with people I know. That's the second thing which happened. The third thing which happened during this period is this, that I had a platform which allowed me to share, which means that I had a question, I had an answer, I could pose that question, I can pose that value chain, and then I can share it with people. I can share around. And then I had a device, the smartphone, which essentially allowed me to have all of this anytime, anywhere. So just think of the fact that this was the period when intellectually I as a consumer was expanding while my banks were going down. My banks were becoming dumber at that point of time because they didn't have the capital to essentially invest in tech and other infrastructure, while I as a consumer was evolving. So therefore what happened? Therefore what happened is this, that it was the gap which essentially allowed a new set of tech infrastructure players to essentially start building on top of that and started providing me the smarter infrastructure. The earliest form of payments infrastructure started building at that point of time, which was 2011, 12, 13 period, when Paytm, which moved on from 197 communication to became Paytm. I was at Vodafone at that point of time, and I used to remember that how Vijay Shekhar Sharma used to come to our office to sell his 197 communication solutions in 2010, 11, 12 period. Versus it became a far cry in terms of how he was selling or essentially making the digital avatar from a payments point of view available. So 2011, 12, 13 period essentially also saw a lot of payments infrastructure essentially getting built. So at that point of time, while my bank was still sleeping, these people were building the infrastructure. We were getting inspired by Klarna. We were getting inspired by the fact that there is a possibility of a real-time, on-the-fly credit in credit risk assessment, and availability of credit can be done on the fly. So we were learning that as a process. We were learning with the fact that there is a possibility of doing a DNA mapping or otherwise from a Lemonade and other sense point of view, and there is a possibility on insurance side. We were learning about the possibilities of Robinhood and others. All of this was influencing the early fintech startups between the 2010 to 2014 period, because these were also the people who were disenchanted by their banks, largely for obviously the reasons of there was a bit of run on the money on bank between 2008 mid, when ICICI had a run on the bank from a availability of cash point of view, and of course tech infrastructure wise my bank was not keeping pace with time. Now as things evolved with that period, what it did is this, that it created the foundation for everything else. And if you see globally, I worked with M-Pesa, and I've seen that if you see globally that how essentially fintechs evolved, fintechs, whether it was a 1996 PayPal or it was 2005-6 experiment of M-Pesa, which happened via the Challenger Fund grant, which came from the UK government, allowing Vodafone to essentially experiment with microfinance, digital value chains, and so on and so forth. All of those experiments were what? They were experiments in terms of allowing the consumer to have a trustworthy digital footprint creation. So PayPal allowed a trustworthy, it created a layer between debit and credit, allowing the customer to have a step-based journey wherein the fraud risk associated with the internet banking environment can be addressed to an extent wherein you have only that much risk which is lying in your prepaid escrow balance, and so on and so forth. And that's what M-Pesa did, and that's what Paytm essentially did in Indian environment, and that's what happened in form of Alipay in the Chinese environment. What does this mean? This essentially means that the foundational infrastructure for all of this is payments infrastructure, which is being able to map and digitally identify the footprints of a consumer from the point of view of how that consumer is evolving in its transactional landscape. Therefore, as a result of that, while I as a consumer evolved from a payments infrastructure point of view between 2011, 12, 14, 15, it was at this point of time the first set of lending in startups and first set of open banking on API infrastructure startups started building. The first set of startups from a lending infrastructure point of view, as Lizzie shifted from UK possibly, and she had seen the way in which global environment, that specifically Europe, was evolving from the point of view of the first set of open banking licenses, which are given number 26, Monzo, Solaris, and multiple others. And then as they were observing how essentially in UK specifically, the open finance infrastructure was getting created, that was possibly also the right and ripe time for essentially experimenting with the lending kind of startup. And this was also the time when open infrastructure or open banking startups started building it. The first set of startup was an entity called Open, another was an entity called Quantiguous. Both of them started at the same point of time, around sometime in 2015, which were essentially supposed to play the next big role. Because by this time, banks had realized that they have missed the bus. And because they were realizing that they have missed the bus, and they also realized that the journey from an infrastructure creation point of view is a long journey, they needed somebody to create a middleware layer. And it is at that point of time, Quantiguous went to the corporate banking route to essentially allow for the corporate banking middleware, while Open went through the SME route, or more of a consumer facing route in a say SME, more of a proprietorship SME value chain, wherein they essentially started building the open value chain as such. Quantiguous eventually got sold to Deutsche Bank in 2018, and that was the first and I think the only acquisition of Deutsche Bank in India or Asia from the point of view of open infrastructure. And Open obviously went on to go further into the consumer side of the story to create more of the consumer infrastructure, and they continue to expand on that part of the story. It was at that point of time only when there was a need to essentially create a Marketa or an Plaid or other versions from a card infrastructure point of view in Indian parlance. And it was at that point of time, sometime in 2015, early, Madhusudan left Visa to start an entity called YAP, which at this point of time is the largest retail banking and API infra company. And as I said earlier in disclosure, that I'm a seed investor into that entity. So that's essentially how the first retail API infra company started. They practically control 90% of the market today from an India market point of view in retail API banking value chain as such. And that's where the cards infrastructure started building. At the same point of time, sometime in 2015 end or 2016 early, is when the other infrastructure started kicking in, which were essentially around the rewards value chain, which were around the wealth value chain, which were around the insurance value chain, and so on and so forth. Obviously, earlier set of insurance startups, which came from a value chain point of view came sometime in 2007, 8, 9. The first startup on the insurance was more of a marketplace. It was known as Bima Deals. It was at the same point of time when Yashish Dahiya was building Policy Bazaar. So they became almost at the same point of time in terms of a marketplace which allowed people to buy insurance. There was obviously, it was essentially just for a search, and it was not a smart productized solution value chain, which obviously it it was almost a decade later that we got something like that from a market lens point of view. uh, Come 2017, for the first time, Reserve Bank of India started discussing about the open infrastructure in the same lens as it happened in Europe, UK, and was happening in other markets. And it was also at the same point of time when inspired by what was happening on tap and pay infrastructure in Australia and New Zealand, and what was happening in Singapore, what was happening on Tube in London, and other markets, that we essentially started looking for the equivalent of Octopus or others from the point of view of tap and pay infrastructure. That's how essentially tap and pay started building in India. Obviously, the Indian standards were a bit different because of NPCI's value chain, and we essentially started building a platform called QSpark in Indian parlance, which was more of a domestic version from the point of view of it is. You can say it was similar the way the manner in which the national payments infrastructure evolved in Japan, and it was done in the similar fashion from an India market point of view. 2015, I remember I was sitting with my boss at that point of time, who is current CEO of Visa and was at CEO of Visa at that point of time for India and South Asia. We were sitting in a bar called Monkey Bar in Bombay, and that was November 2015, and he told me, "Yar, what is the point why NPCI is launching UPI?" And we were aware of the fact that this is going to change the infrastructure forever, because there is nothing better than tokenized real-time payments infrastructure, which allows for settlement, reconciliation, every single damn thing at the real-time basis. So we were aware of the threat that it will bring. Of course, there was a previous avatar of it, which was IMPS, which was launched by Shamla Gopinath, who was the deputy governor of RBI in 2009, sorry, when it was launched by NPCI in form of mobile money identifier. Obviously, it failed because it was ahead of its time purely from a MMID point of view, but it worked wonderfully when we allowed for account-to-account transfer. So UPI essentially started building. 2015 end is when essentially it came into existence. During this period, sometime in early 2015, while I was still working with Visa, I essentially did a small experiment. While traveling from India to Singapore, that for my induction in Visa, I essentially did not carry cash with me. I went to Singapore without carrying cash, and I documented my learnings in terms of what happened. So I wrote a piece called Cashless in Singapore and Learnings for India. It was essentially around that, what do you face when you do not carry any form of cash? So I was not carrying Singapore dollars. I obviously had no access to mobile or other payments infrastructure from Singapore point of view. I just had a card. I did that small experiment, documented that small experiment. And then when I came back to India, and it was a LinkedIn post, there were a number of people who said that that's all is possible in Singapore. It is not possible in India. Even if it is possible in India from a digital transaction point of view, and I'm talking about pre-demonetization 2015 early. Demonetization happened on 8th November 2015. And at that point of time, number of people came back and said, boss, this is not possible in India. If at all it is possible in Mumbai, or even if it is possible, not possible in Mumbai itself fully, it is possible in Powai, where I live in Mumbai. And that's the best possible scenario that you can get. Obviously, being a practitioner of the thought process and not the theoretical guy, I was of the view that let me try to see what are the challenges that one faces when one goes through that. And with that view in mind, to 23rd March 2015, I stopped carrying cash. I did not carry cash in India. I traveled during that period from India. Across India, I traveled during that period to San Francisco, to Bangladesh, to Algeria, and multiple other places. And then I did not carry cash at all. For that 2-year period, I essentially went through a hell lot of pain in terms of trying to appreciate what exactly happens to a human mind when there is no cash, and what are the journeys which happen. This, of course, became big post demonetization. You can find a BBC documentary on that, which essentially goes by the name The Cashless Man of India. You can find a documentary by a gentleman called Ed Kashi, which is a World Photography Award winner and one of the best known documentary filmmaker in the world. They traveled from New York and essentially built a documentary on the work that I did during that period, which became a foundation for a number of things which happened from the payments infrastructure point of view in India. And essentially, it was at that point of time I essentially got associated with RBI and MIT to help them form the infrastructure from the point of view of how essentially cashless environment or a digital environment can be built over the period of time. And that is how essentially my association with this entire value chain became across the board, from startups to regulators to government to multiple other platforms. And that's how it evolved over the period of time. During 2015 to 2018, we saw multiple value chains getting created from the infrastructure point of view in Indian parlance. Of course, UPI expanded. UPI expanded from UPI from a transaction standpoint to UPI from a collect standpoint. Then at sometime in 2017-18 is when Yes Bank essentially played an interesting role. Sorry, 2016, when Yes Bank played an interesting role in allowing a bin sponsorship kind of a value proposition for UPI, which was largely restricted to prepaid instruments. And that's how essentially the access to payments instrument became so universal in the nature in terms of how PhonePe, Google Pay, and everyone else essentially ventured into this value chain. Of course, 2017-18, further few things happened, which is APIification from insurance started happening at the same point of time. And then we started looking for how that infrastructure was evolving. Over the period of now, between 2018 to 2021, what essentially happened is that we started taking greater and greater cues. 2017 essentially and was the first piece of paper or a discussion happened with the regulator from an account aggregator thought process point of view. 2018 August is when the first set of in-principle licenses were given to companies like FinView, MonMoney, and others from the point of view of account aggregation value chain. Of course, this value chain from its overall thought process point of view was similar to what happened from an open finance or open infrastructure point of view in UK and Europe and other markets. And then from that time onwards, essentially the idea of data access and universalization of data access, and obviously data security and other things started happening. I remember earlier discussions which happened between 2018-19. Obviously, some of the things have not essentially reached a point from a data security or a data realization standpoint, but I'm sure they will over the period of next 6 to 8 months time frame, and so on and so forth. And then taking cue from global markets, we essentially started opting for neo-banking infrastructure, which essentially was again the same piece from the point of view of nothing but because we do not have a neo-bank license regime at this point of time in India. It essentially went into the piece of exploring the value chain in form of a prepaid as a store of value, which essentially means that what Osborne was earlier talking from a question point of view in terms of revenue realization front from a transaction standpoint. So while you do not make money from a UPI standpoint, you do make money from an interchange point of view in MDR in prepaid instruments, which is upward of 1.5% or so, incumbent upon what kind of card it is. Is it a platinum signature? Obviously, you do not have an infinite variant from a rupee prepaid point of view in India. So all of this essentially led to further deepening of payments infrastructure in that sense, digital transactions in that sense. Finally, now, few months back, 2 to 3 months back, we essentially saw finally two of the so-called neobanks, which is Apify, Jupiter, before that Finin and others essentially started operating and started offering consumers a different form factor and a feel factor at that point of time. We did our best during this period to appreciate this ecosystem better. So what we foundationally do every single year, and I don't know of any parallel anywhere else in the world also, which is every single year we travel across India. 11,000 kilometers we cover by road. We remain on road for 70 odd days. We meet up with consumers, payment infrastructure players, with the lenders, with startups, around 400 to 500 startups we have every single year. We cover 19 cities, 12 villages. We meet up with people, understand, appreciate how this entire value chain is evolving, which essentially at the end of the day helps us in terms of doing what we do as an organization. So that's kind of a summary or a bit of a long monologue at my end from the point of view of the way we see and we have seen this infrastructure evolve.
That's an incredibly rich account, and only a small portion of that I actually know. And so that's really kind of deep and informative, and gives you a sense of the kind of, the longer kind of gestation and the possible variations and the things that were tried a little bit too early, and when they kind of gather force. So it's interesting to see the precursors coming up in that kind of evolutionary tale. I think it's always really compelling to think about the digital in terms of an evolutionary process, rather than a sort of black box, which you might like to associate with one brand or another app. Does anybody have a raise their hand question in their head at the moment? Well, I just have a look at the chat here. So perhaps what we'll do, because we have sort of a short period of time before we take our virtual tie break. So perhaps we'll just open up to questions more broadly, or to conversation. Would anybody like to start off? I can see Pradeep has a question here about the role of intermediaries in the rural economy, and whether the intermediary financial services are targeted a variety of farming groups, and are there different challenges and opportunities given the many kind of variables in the rural environment, whether that's which could be geographical or ecological or based on class or caste, which is also in here. I mean, because I think we think a lot about farmers, and then we think there's incredible diversity when we think about the different things that people farm and the different setups in different parts of the country. Does anybody want to attack that one? Is that directed to everyone?
Can I take that question, Adrian?
Specifically?
To Anil.
Yeah, can I take this question?
Yeah.
Thanks, Pradeep, for this question. Yeah, it is. Well, I think the landscape in the rural sector is quite different compared to the dynamics of the urban sector, and primarily what we have seen in terms of the opportunities. Of course, yes, as we said, unlike the way banks have gone ahead and given the so-called Kisan credit cards to these farmers, where the end use monitoring to a large extent has been kind of tampered, right? It has really not gone into exactly what the end use was. In our case, what we have basically looked at large entities or aggregators, who are in turn engaging with these farmers. They're trying to cut the middleman in between, wherein not only they give inputs, to these farmers to grow vegetables or crops or fruits, for example, but they in their value chain, they buy this back from them, right? At a particular price, for exactly. So the farmers from their perspective are in generally okay, because now they have one point of source where they really don't have to take everything to a point and depend upon the trader to kind of, demand a price and then sell. And if they don't, then they have to come back and, dump everything over here, which is usually the case over here. So on the positive side, I think the farmers are more keen to engage with these kind of value chain aggregators, who are bringing it up the value chain. In terms of challenges, yes, of course, it's not. There are procedural delays in terms of reaching out to the farmers, getting all the documentation in place. Sometimes the documentations are not exactly as clean as, the way it is over here. But generally, we, in our last 1.5 years of journey, we have not encountered much of an issue, except, last 2-3 months, because of this lockdown, there had been issues because the whole economic itself went for a toss, right? So everything literally stopped. And because of which there has been stress, especially because if the milkman is not coming up to the dairy plant, right? So then the whole value chain kind of gets a little bit of disrupted. So yes, we've been able to, see those kind of things happening. And we did make provisions for that. But these are, I would say, challenges that comes, which you and I really cannot predict every time. The second area where we see, unlike an urban space, is that these farmers in these rural areas are very, very close-knit community. So literally a dealer who is selling agri implements, they literally know those 200 farmers over there. It's like a very, very close community itself. So what becomes very imperative for us is to ensure that on our side, we also have local people who understand the local dialect, who understand the language, who understand the mentality, who understand who is going to pay, who is not going to pay, and does that kind of an awareness program and brings them to that level that this is just not one credit. You have a long way to go. So if you build your credit history slowly and slowly, pay in the right time, do repayments on the correct time, right? There would be more things that could come to you itself. So it's like a journey that we are slowly building it up. Nothing on the socio or any other pointers as such, but I think any area that you go, there is always an opportunity and there are barriers and there are issues. So the fun is how you try to solve that pain point. I think what Abhishant also said, that he went cashless for 2 years. So to understand that mindset, it's a very different mindset in the rural, villager versus, an urban guy who probably has many avenues to track him over there. So yeah.
Thank you. Thanks.
I
Thanks.
have a question. I've just put it to text, but I want to put a question to Abhishant, who's talking again about working with the RBI and others. I mean, I was wondering in terms of the evolution of policy in India, the extent to which policy has had to react to disruption and innovation in the market, or is there a point at which the RBI and a sort of fully fledged policy kind of is trying to get ahead of developments and set the parameters for digital transactions kind of going forward? How do you see the dynamic there?
Okay, so essentially, I'll divide it into two pieces. One is that RBI has been issuing vision documents for quite some time now. It's been 15 years since the first vision document came into picture. So that phase, from the point of view of laying the lay of the land to essentially say that how will we build the value chain, I think that has been happening for quite some time. Even before the crisis from a Russia standpoint happened, wherein Visa and Master essentially stopped for a certain period of time and so on and so forth, the regulatory environment out here was essentially of the view that the national payment schemes are essential, and that's how essentially NPCI came into existence in 2007 or so. So that ways, I think the national schemes and the national infrastructure has been coming into existence and has been essentially driving a lot of things. So if you look at overall from a payments infrastructure point of view, there is a FIS study which says that India has the best interoperable payments infrastructure in the world. It is the only payment infrastructure in the world which is rated 5 out of 5 for its interoperability, real-time settlement, and real-time reconciliation and other pieces. So from the overall value chain point of view, and not creating islands of wealth, which essentially means that on one side you have a Tencent and on the other side you have a Alipay, not creating islands in that manner, but essentially allowing for a single unified expressway on which cars of every size and shape. So I think that ways, from an infrastructure standpoint, the regulatory environment, I believe, if I restrict myself to only payments, has been quite evolved. It has essentially looked at all these pieces much in advance. If you look at now the manner in which we are moving towards tokenization as a thought process, that as such was also far ahead in that sense. Of course, one of the piece which possibly we got a bit delayed was more on the tap and pay side of the journey. And because of the fact that if you look at any market in the world, when customers evolved, the consumers essentially evolved in manner which was, says in much of the markets, it was a step-by-step journey, which is you essentially first had accounts, you had internet banking, and from there you essentially moved into a form of mobile banking. You had a card, and from cards you have moved on into tap and pay environment. So while in markets wherein tap and pay became big, which is say Australia, New Zealand, Singapore, and few other markets wherein tap and pay became big, the QR based methodologies did not. While at the same point of time, the markets in which QR or mobile essentially played a role, tap and pay didn't. Because if you look at it from a consumer behavior or a psychology, the manner in which I as a consumer evolve, I as a consumer, when I evolved already in my journey from point A to point B, and that too has happened in a very, very recent time frame, I do not look forward to next set of change. Just think of the fact that when you go to a nearby coffee shop or you go to a nearby mom and pop store to buy something, you
perhaps if anybody has some thoughts for some other questions in the closing minutes. Does anybody have a question for Osborne? I think I'm just going to talk on business models. Yeah. I mean, from a venture capital point of view, what do? Do you invest across a spread of business models? Do you try and pick a business? Do you try and pick a winner, or where do you look for the addition? Where do you look for the kind of spark? In any one of those four categories you showed us, where do you look for the kind of standout in terms of what you want to get behind?
I think thanks, Adrian, for the question. I think from our perspective, we look at all those kind of models really, and within those models there are specific verticals as well that we like and we think are large enough to create large startups and large companies, and therefore we'd invest across those verticals, and within those verticals, the various subsectors as well is something that we'd invest in. Like, for example, in the presentation that I'd made, Khata Book is one of our portfolio companies to start with, right? They are enabling micro and small merchants to manage their accounting and ledger related entries. And now they're evolving into a whole bunch more products. There's another company on the infrastructure side called Card91. That is another portfolio company of ours, where they are creating the card infrastructure for India, whether it's credit, debit, prepaid, and other payments methods as well. So they are creating that infrastructure for anyone to create their own card programs, right? So stuff like that, we invest across the segment. We like large markets to invest in because that gives us some comfort that there is a large space to be disrupted, which is either underpenetrated or underserved. And therefore we like to invest in those. Obviously, the founder background also matters a lot for us in those spaces. If they come from that experience, not necessarily from a business perspective, but they know the nuances of that particular vertical very well, that really excites us. And I mean, those are two broad points that we look at when evaluating investment opportunities in the space. And yeah, I think that's where we come in.
I suppose I've got one final one in case anybody else doesn't have, which is just broadly to all three of you. I mean, do you see kind of regionalization across India in the uptake of these platforms? You know, because I know we think about kind of in Australia, we think about platforms as always being sort of nationally distributed and just the same in Perth as they might be on the East Coast. But do you see kind of regional concentrations of uptake in one part of India as opposed to another, or do you see a lot of companies becoming big players, you know, in South India, but not so much in the North? I mean, how does that kind of dynamic play out? Because I think some of the underlying capital might be quite regional. But are these all essentially pan-Indian businesses?
So Adrian, can I take this question?
Yes, please.
Yeah. So obviously, you know, when we kind of started off, you know, obviously you start with a limited capital. So the idea was to look at, you know, which are these low-hanging and progressive states, you know, where you could really create these, you know, successful business models in totality itself, right? So the last 1 year, we decided to spend most of the time in definitely, you know, in south of India, specifically, you know, the south and the west of India itself, and to kind of consolidate and have the learnings that comes out in this entire value chain, rather than going, like a pan-India presence. Now, you would always feel that it's a huge country, so you can go to all the states, but that really doesn't happen that way, because you need to have your bandwidth, you need to have your tech infrastructure up in place, you need feet on street, you need those local teams. So you need to cross those layers after layers and then try to reach, to those. And especially in our area, we have been very, very careful in selecting the kind of location that we want to grow. Now, having said that and learned the lessons, both in terms of opportunities and challenges, what we are now looking at this financial year is to slowly look at those states which have similar resemblance, moving on to what we have been doing. The issue is, many of if you look at banks, so many of these banks have certain areas or pin codes which are, let's say, under the negative list, right? While you have an intent to do, the banks may not have an intent to, underwrite those kinds of, opportunities over there. So we've been able to identify those gaps, but we're just taking a step-by-step approach, learn at every steps, and then move from one region to the other region itself. So yeah, but eventually, yes, the platform will be able to, serve, the most noticeable states in India and reach out to these corners. Yeah.
I think in my opinion, I have seen two types of models going after different, either regional specific or national, right? The ones that are largely online and do not really require offline presence in terms of, as Anil mentioned, feet on street or anything like that, they go national. Their aspirations are national. They end up having regional languages as options on the app, and all of those kind of customizations that they do to target audiences from different regions across India. So very rarely have I seen at least full digital companies going regional specific first, right? And to give you an example, there are companies in the media space like ShareChat and the others that have gone fully national from the get-go, right? But then there are your companies that require some level of offline operational expertise, right? And then they end up going city by city or state by state and targeting those consumers, right? And so that ends up becoming a regional growth first and then national, versus some of them end up going national first. But largely what I have seen from a lot of the companies, whether they are online only or online and offline, is that they end up having concentration in 2 or 3 cities, largely. Like, for example, in a Mumbai, Delhi, Bangalore will be large concentration. And then the other cities will be smaller concentration, at least for a bunch of the startups that we come across. There are some others that end up primarily looking for presence in rural or tier 3 and 4 cities. And there they will have a large presence. But for a majority of them that I have seen, a lot of them are national, but end up having concentration of users from particular, 2 to 3 cities really. That's at least what we have seen.
Fantastic. Abhishant, do you have any thoughts to add to that question?
So I'll possibly add that, and what Urvashi and others have asked, I'll put that also in perspective. So Urvashi, at this point of time, from a collections point of view, collections is one piece from an entire value chain, which was not digital till some time back. But now there are specialized companies which are into digital debt collection. Adrian might have seen the news 3 days back of a company called Indebted, which is an Australian entity and is into the digital debt collection side. We are investors into an entity called CanPay, which is a digital debt collection entity out here in India, based in Bangalore. So debt collection also from a digital value chain point of view is also going last mile, and therefore it doesn't require to be regionally present. When you look at it from a physical concentration of a lender point of view, if you are, say, somebody like a TVS Credit and others, which are largely based in South, obviously their borrowers will also be based in South, and therefore their collections will also be based in South. However, for those who are digital debt collection value chains like Indebted in Australia or CanPay in India, they are universal in nature. They can address a digital debt collection value chain across India, and not just in India, because from a borrower psyche point of view, most of the borrowers out here in the Southeast Asia or India environment behave in a similar manner from a borrowing thought process point of view. And we are not consumer economy first and more of a savings economy first, therefore our thought processes are more or less aligned. So a similar kind of a digital debt platform can also is also exportable, expandable to other markets of similar nature. So that's essentially more to from your question on the regionalization from a collections lens point of view. As far as other pieces from a regionalization or a national point of view, I think that's already being perfectly stated by Osborne and Anil from the point of view of the manner in which whether it is an entity which has a physical on-ground presence, or is essentially presence more from a digital lens point of view. Within digital value chains, however, over the period of time, the lenders have become a bit more aware in terms of what kind of consumers they want to address. So it might not be very region specific, but essentially the kind of consumer they want to address upon from the economic background and otherwise. So I think it is more driven by that. As far as your question, Urushi, is concerned on the savings side of the journey, the first real savings experiment from the point of view of small saving instruments, of course, from a digital point of view, happened sometime when in 2017 when Kaleidofin started, which was essentially a team which built KGFS, which is Kshatriya Gramin Foundation, from a point of view of rural small savings instruments. As that rural small saving instruments value chain which came out of IFMR became successful in down south, the two founding team members of that essentially quit the job to start on the small savings part of it, which was Kaleidofin, which was more targeted towards the rural value chain, with the model wherein you had a middleware value chain of institutions like Seva who had the on-ground presence while they were providing the digital layer on top of that. So essentially to say that it was an assisted model of savings and not the fully digital model of savings as such. Of course, what today's now our neobanks are promising is more on the digital side from a savings value chain point of view, and essentially revisiting or foundationally rethinking savings. But that savings value chain is very, very different from a European or other savings value chain. Because if you look at that market, in Europe, you have a European central guarantee, which essentially guarantees your savings up to 100,000 pounds, 100,000 euro across European markets. As a result of that, a citizen of Germany can invest into a fixed deposit in Poland's bank, and they will essentially carry the same security, while there is an interest arbitrage, which allows for a better savings. As compared to that, in our environment, our interest arbitrage are largely driven by what kind of bank it is. If it's a small finance bank, you can have an interest in the range of 6 to 7%, or if it's a scheduled commercial large bank like Axis, ICS, and others, where it is 3.5% or so. So of course, there is a play which is there in the similar sense, and it needs to evolve. At this point of time, many of the institutions who are building with small finance bank are building based on the fact that they can offer better savings rate to their consumers. So that's where essentially that piece will lie.
Adrian, if we have some more time, can I address Urvishi's question on collection agencies?
Yes, and we'll just go 5 minutes late on the next session so that everybody gets a drink.
No, it's okay. I mean,
it'd be great to have your thoughts. Please jump in.
All right. I think just touching on the collection agencies aspect, right? I think it really depends on how you look at the entire value chain of collections. Almost 95% of debt is typically collected by the bank and its agencies. For the other part of the collections, where the bank cannot contact the borrower in that case, that's where they depend on these collection agencies and companies like Abhishant has invested in called CanPay, right? Now, for those companies as well, they will use digital methods of skip tracing and contact tracing and all of that stuff to primarily digitally contact the consumer. Again, these can be done remotely, right? And so for for that small sliver where you need to actually have feet on the street for folks to go out and knock on a person's door, that's where the end collection agencies come into place. But I think, but from the perspective of the collection agencies themselves, sure, there are thousands of small collection agencies across India, and banks have enlisted all those thousands of them that they work with. But at the same time, if you look at the unit economics of digital collections or even collection agencies, it becomes very tough to have on-ground collection agencies for a loan that is 10,000-20,000 rupees. The unit economics just don't make sense to have those last mile collection agents. And so sure, it is turning digital and all of that is happening, but then and it's all going to end up happening online, is what I think. And so there are regional specific collection agencies, but I think over time, the unit economics will not make sense for the kind of ticket size of the loan that a lot of the banks and fintechs are starting to lend out. So that's, I think, just to touch upon the regions of these collection agencies that are comfortable or not.
Yeah, but again, there's always a political economy in all of these things, in terms of of what you need to put into what you can get out in various places. I have so many questions. It's such a privilege to have you all three of you joining us with so much expertise. I could go on asking questions forever, but decency doesn't allow me to do that. I just hope that we get a chance to talk further in the next little while, and also perhaps meet in Delhi and in Mumbai and even in Himalaya to carry on this conversation before too long. But I do want to thank you on behalf of everyone here and the audience through media for sharing such deep, rich and detailed perspectives across all the work that you've been doing. It's been a great combination of dealing with the real specifics of India, but also the kind of big picture stuff that I painted fairly dimly before we began to hear from you guys. So thank you ever so much. I really, really do appreciate you joining us. And I think sure everybody else would like to give a virtual round of applause before we take a 10-minute break for tea.
Thank you so much, Adrian, for having us. Thanks to everyone.
Thanks, Adrian. Thanks to everyone for joining in.
Look forward again, right?
Thank you all. Thanks a lot.
Pleasure.
Thank you.